Welcome to the Pipnotic Symposium for the 4th of July 2019. Let's see if I can do this take without getting interrupted. We've got kids and the family running in all the time. So, right, today we're going to talk about some of the comments that Eric sent in relation to the use of the software. We're going to talk about multiple time frame analysis and why it's important to do this, and how discretion is something that's really important, I think, to trading. Okay, so the software the software does a really good job in identifying areas of supply and demand. You can look at a price chart and you can see these little areas marked off, and most of them hold for a pretty significant period of time, long enough to be able to take a trade with very little risk. But sometimes you need to incorporate a certain degree of discretion to make sure that the level is doing what it should be doing. Like if you look at this one here, this area here is good. Why is it good? It's because it was able to consume opposing supply. Here it is. This is supply. Why is it supply? Because it managed to move below these lows here. And so we actually, via this area here, we were actually able to cause market structure to failure, which in this case was support. Okay, so this is a good area. And so what happens is when price accumulates below this area and moves through, that tells us that this area here is important. Why? Because, well, we don't have volume readings in the retail FX space. This is a really tricky one because every broker only has the volume that is related to their customer base, their user base. And so if you have a broker who has 10 users, you get 10 users volume, which is pretty useless actually, especially taking into consideration the fact that most of the retail traders are losing money. And so you're looking at the volume of traders who are losing money, which is kind of maybe not something you want to pay attention to. And so this is why you have to look at the strength of an area of supply and demand based on what it's able to accomplish. And when I say accomplish, you want to be able to validate it based on its strength. And so you want to see, shirt tearing strength. So if you have an area of if you have like price moving up like this, we have a nice uptrend on a very big time frame. So we have trend lines that are moving up like this. This is support, support, support. What does that mean? That means that we have support that's holding, demand that's holding like this. And so if price is able to move down to an area and then move through it and remove this, well, that shows that we have some strength here. And you can't see that. You can't see just by looking at this area based on its pattern alone that it was strong enough. Okay, you have to look at the area in relation what it was able to actually cause. Okay, and so this tells us that this area was strong enough to consume liquidity available here for the buyers. Okay, and it moves straight through that. And what does that tell us? So that tells us that we can expect price to turn around or have a bit of a bounce of this area once it comes back down. Okay, this is pretty important. So you can look at market structure. I really like to look at trend lines or channels with market structure. So you have price moving up and down in a channel. And so when it moves out of this channel, well, that tells me that there's a fair bit of strength involved in the move out of the channel. Also, you can do the same thing for opposing, where you have price moving down, price is moving in a channel like this, whatever, and then it moves up. Well, that tells us that we have a really keen interest on buying at the point, the origin of the move that pushed price out of the channel. Okay, and then we have opposing supply and demand, which is the most important one, and that is stuff that's related to this. So we had this area of supply, and this one is related to this one here. Okay, price went up, we tested it, we moved up, we came down, we accumulated in there, and we cut below it. What does that mean? Well, that means that this is significant. Why? Because it managed to move through this. And this isn't a really good area, but it is a good area because we had a good pattern. Price tested the area and then it moved above. Then eventually it managed to move above this one here. Okay, so this one here. And this is one because price left. We tested the area there, and then we left. Okay, so you have to pay attention to all of these small details that are actually telling a story of the ease or lack thereof of price being able to move through the liquidity of a market. So if you look at this chart, for example, you're actually seeing a delayed indicator, and price is essentially a delayed indicator because it's showing you what has already happened, and you actually have to focus on the black space. But you look at the black space, you can't see anything. But the cool thing about this is, in this black space, there are a lot of like what ifs and hows and a lot of questions that are unanswered. And so you have to use what you can see, which are the candlesticks, and you have to look at this in relation to the black space. You'll often hear me refer to the black space on a chart, and that is because this is essentially where the liquidity is located. Okay, so if you look at this, in this area here, it managed to push away. What does that tell us about liquidity? Well, that tells us that we had quite a lot of buyers kind of down here. We tested the area, probably related to something over here. We tested the area, price accumulated. We had an attempt to move price through it. We didn't get through it. We rejected, we accumulated, and then we moved higher, taking out this area here. So that tells us that we have a keen interest to buy this area here. Now I'm not looking on the higher time frame. I don't know what's over here, but I can just see that this is a little bit interesting. And we had a small bounce, nothing major just yet. We had no great reaction yet, and so this was maybe something that you could either sit on or take off at a very small profit. But these are the kind of things that you have to look at. And so when I talk about looking at what's driving price, the thing that I want to do is I want to go to the bigger time frame, which the weekly is a really good time frame to look at. So if we have a look here, and you can see here we have a channel that's going up like that. If you want to use channels, I think channels are quite nice because they kind of encapsulate price. Okay, and now notice that price respected this market structure for a while until we moved into this weekly supply. Within that we formed this monthly supply. Within that we formed weekly supply, and it's still untested, and price is moving low. What does that tell us? Well, that tells us that we are going to be moving price lower, and this is also in line with the fundamentals at the moment. So the interest rate cuts that are likely coming numerous times this year in the US dollar. And so this is obviously going to cause the American dollar to move lower, because this is going to cause flows to move out of the American dollar and into a high yielding currency like the Kiwi or the Australian dollar. Okay, so you can see that our price was actually able to move out of this weekly channel. I mean, that's pretty big, that's very significant. And so if you look at the move, and you can see that, it happened right here, and you can see that when price left this area of supply, we moved down to here, we accumulated on the edge of this area of this channel, and then we moved away. And so this tells us a lot about the strength and the commitment to sell this currency pair at roughly this level. Okay, this is really important, and so we take this information back with us to the smaller time frames when we're doing our analysis. Then you can also say, okay, well, do we have some opposing areas here that we need to be aware of? And notice that we have this area here, which price is currently sitting on. Is this a good area? No, it's not terribly good. And why is it not good? And it's because it's reacting to this really messy, pretty efficient trading here. Price very clearly moved up and down here like this, very efficiently. And efficient trading, what does that do? That clears out liquidity. The inefficiency comes from here, because the inefficient trading shows us where we have an imbalance in supply and demand. You can see this bar right here is the one that moved away. Let's remove this. This is the one here that moved away, and there are no more wicks below this point, and so we would expect price to show some kind of a hesitation in moving below this once it moves back into this area. And again, this whole thing here is standing on this leg, and this whole thing here is standing on this leg, and this whole thing here is standing on this leg, and all of this here is standing on this leg here. And why is this important? Well, this is important because when price, I've talked about this probably a few hundred times, I think, in the years I've been doing these videos. And if you have price moving up like that, and it starts to turn around and go down, the areas of what appear to be demand on the leg down, so this piece from the high here and move down. Okay, so I mean, there's no demand in this here when price starts to turn around. The demand you have to be focusing on is in the leg that's moving up, because this is demand. This and all the other ones in here on the move down, these are reactions to the demand, which are over here. So this is the leg that this whole move is standing on. You have to really pay attention to this. And so this is not demand, this is a reaction to the demand in the leg that the move is standing on. Okay, this is not demand, this is a reaction to the demand that's actually in this move higher. Okay, so this is not demand, this is a reaction to this demand. Okay, and this is not demand, this is a reaction to this demand. And so you constantly, I know it's maybe a little bit weird and difficult to spot, but when price is moving down like that, you cannot be looking in this leg for demand, because there isn't any. There's only going to be supply in here because price is moving down through these areas. So you have to bring your attention to the move that price is standing on. Okay, and if we look at this is a really good example. Here we have supply, we have supply, we have supply here. Okay, and so this is not supply, this is not supply, this is not supply, this is not supply. This is supply. Why? Because it showed us, oh, beautiful. So I'm listening to some music at the moment, and Brian Eno's song just came on. Oh, it's beautiful. And so, I mean, when price came up here and left, we know this is supply because it's a child and it reacted to this parent. So this is real supply, and this is a real supply because it managed to accomplish something. When price left here, we managed to move out of our channel here and cause market structure to fail. None of that happened in this little piece here. Nothing. This is the high. This is the origin of the move that moved through and out of the channel. Okay, so when you're looking at stuff like this, let me remove this channel here for a second. Okay, when we look at this is not demand. This is a reaction to demand that is in the leg that moved higher. Here we have until price moves back to the origin of this move. Okay, so back to here, this can be traded. Once price comes down here and has a bounce, then this is gone. You can't look at it anymore. Then you have to look at the leg that this is standing on. When I say this, I mean, oops, wrong thing. This whole, oh damn it, come on. This whole piece here, all of this is standing on this leg. And once price rebalances this move here, then it becomes this. And once price returns to this area here, then it starts to include this. And once this happens, and price comes back to this low here, to this area of demand, then it includes that. And what does that mean? Well, that means that you cannot trade anything in here. You have to look at the leg that this whole thing is standing on, and this whole thing is standing on this. Okay, this is kind of the origin of it here. Okay, price left here, and these are just moves higher. This is the origin here. This is the foot. Okay, and you can start to cross them off the list. Once price comes here and it starts to test here, then this is done. Why? Because the flows are moving against that as well. Okay, because now they're starting to move down, and so they're going to be looking for the demand on the legs up. Okay, and as we looked in the previous example, here we have one, here we have one, here we have one. So test, test, test. We're not trading this one, we're not trading this one, or this one, or this one. And while they may hold temporarily, it's generally not a really good idea to do that. So when you start to see orange dots below, or rather just higher lows, well, then you know that you should only be buying. And in the version of the supply and demand software that I just started writing for MT5, all this stuff is going to be built in. It'll be really sweet. I look forward to getting that finished up. It's going to probably be half as big, many times as fast, and it's going to contain really awesome functionality that is going to focus on the essence of what it is that's moving price. So you can look forward to that. I really look forward to getting this new version finished. But and so when you look at the question, I mean, what's driving price? I mean, you have to focus on the leg. What is the origin of the current move? This is the origin of this move. Okay, this is an attempt to move towards the origin. And this is why I always talk about the beginning of the buy zone. Where's the beginning of the buy zone? The beginning of the buy zone is the edge of the attempts to equalize price and bring it back to this origin of this move. Okay, and so when price comes back down to here, we're not buying in here or here or here. You're waiting for price to come and enter a price level that's on discount. So we have a really fair price. And once price comes back down to this level, well, then we know that price, rather, when it comes back to this level and moves higher, then we know that if price moves beyond that, then we're going to attract more buyers. Okay. I hope that was clear. It seemed like a bit of a clunky explanation. Okay. And so when we're referring to what's driving price, you have to pay attention on the higher time frames to what's going on. Let's find another example. Let's look at this. So what's driving price on this price chart? Well, if you look at this, you can see that we are reacting to this area of weekly demand, which has been tested many times before. Okay, so notice this low, this low, this low, and this low. What does that tell us about where we should be looking to buy? If we have a look here, all of this is standing on this. Okay, and so this and this and this, they're not demand, they are reactions to demand, which is in here. Okay, and this leg up here. On this time frame, on the smaller time frames, you'll see very clear patterns. And here, even from this high to this high, and here we had a trend line that went down. Demand caused market structure to fail, qualifying this as demand. Also, it managed to consume this supply just here. Okay, and so this is valid on the small time frame. But when you're on this time frame, you want to be looking at what's driving price and where is price in relation to the origin of the move, which is this. Okay, this is the low, the lowest low we can see. This is the highest high. This is the move in between. This is price seeking liquidity, and price will typically move below the lows and that have already been established and above the highs that have already been established. And so if you look at this, I mean, since this high, we have the highest high, which is here, which is the top of this area of supply. Okay, and here we have a nested area, and here we have this little price nodule here, and price tested it many times before. But you have to focus on this move here, because this is where you want to be buying. So you take this information with you onto the smaller time frames. Let's have a look at the Aussie dollar. And if you look at this, you can see that we have, so what do we have? Okay, we have some price here. So you can see that here we have the same thing going on. Where we have the origin, this is the lowest low, this is the highest high, and everything in between is an attempt to move through the liquidity in the leg that the whole move is standing on. And this stuff is fractal, okay? And so we can see this on the monthly time frame. We can also see this on the minute time frame. It's the same thing that applies. And if we do that for a sec, let's go to the 5-minute chart, and you can see we got to go somewhere we can actually see a low. Okay, here we have a low one where we have, here's the origin of this move. Here's the origin of this move. Here's the high. Do you want to be buying here? No, you don't. Do you want to be buying in little price moves like around here? No, you don't, because we have supply that's holding price. You want to be focusing in the moves from the low, the origin of this move here, okay? So you want to be focusing on the stuff that you can see, the well-formed demand that's in here, all right? Okay, and so when I look at a chart like this, monthly, weekly, daily, 4. So when I look at this, I want to, I need the same chart on all of them. There we are. I want the reason I have this higher time frame here is so I can see what's going on. So I can see, okay, where do we have, what's price doing? Is it moving higher? Is it moving lower? We can see currently that price is testing the supply, the micro supply in these areas here. And you can see them here. Okay. And so any attempts to kind of like sell in these are a little bit dangerous because price is forming these higher lows, which enables us to draw our trend line like so, and we expect price to move up until it meets opposing order flows, which are going to be located in the leg that moves lower for this price structure. And so what does that mean? Well, that means that you have to look in here and you have to find areas of supply that might challenge price. And if we have a look on the weekly chart, we can see that here, we can see it. So mark off the areas here. Where's price now? Well, price, first of all, how far has price gone? Well, price has gone up to this high. Yeah, I mean, look at this area here. How price kind of like moves sideways, accumulated, and then it dropped off. The slingshot here, oops, was pulled back to this level here, and then price left. Okay, then we had another slingshot that was pulled back here. Our price kind of pulled back, and then it was shot down. And this is a slingshot because we had some nice moves away. Here we had another one just here, how price went up and then went down. So if you look at these areas, I mean, price normally has a good reaction at them. So you can see price, this is the top of this slingshot. Price came back to it and we had a good pull away. Once price tests it once, then we can't touch it anymore and you have to look higher. Okay, then we have this one here, just here. We have this area, price moves up and then it leaves. So if you look at that area, move to the right, you can see that, I mean, this is the test of that area there. Then you have this one here. So price came up to this area here, which is where that dotted line is, and that's where price tested and then it retreated. Okay, so we're not looking in this stuff here, we're not looking at the highs here for supply because there isn't any. You have to, if you want a quick visual clue, just ask yourself the question, okay, are the rectangles below or are they above price? And here they're very clearly below the price. That means do not sell. Even if you see a really nice area here, you know the major flows are moving higher, so do not sell. Okay, so I have a directional bias. I do not want to sell. Sorry, I do not want to buy. I want to sell. Okay, went into holiday mode there, and so you can see very clearly now that even though price is going up to these highs and it's going down, it's going up to these highs and it's going down, and we're going lower, 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 and it looks really good and clean and beautiful. Buying those at those areas is really dangerous because you can easily get caught out. If you want to buy areas of supply or demand in a leg that's moving higher like this, then you want to focus on the areas that are able to consume these. Let's have a look here. So let's look at this one here. So this would be an area that would be interesting. Okay, so let me see if I can move this so I can get more on. So this is an area here. The slingshot was pulled back and it left, and price has not been back. It went up, it tested it, but what area completely took it out? I mean, it was this area here. You find the move through it. This is the first move through it, and you find the origin of that move. Here's the origin of the move that moved through it. So now you know that this area of demand is responsible for consuming this supply, which is gone. And so you trade here. Okay, you don't trade this one or any of the other ones. You trade the area of demand that is responsible for consuming the opposing supply. The only supply that you want to be focusing on is a supply that it's in the leg down. Okay, does that make sense? I hope it does. Okay, and then you can do the same thing again. You can say, well, where do we have another one? Okay, so we have a So we have this one here. This is nice. We had the slingshot was pulled back. Where do we have another one? We had the slingshot was pulled back here. It was kind of pulled back into this area here. So now we can go in, we can see. So this one's gone. And right now there's nothing going on. This one is currently still in play, and so there's no real reason to do anything just yet. Okay, we just have to wait until price kind of comes back up into this area, and it hasn't even tested it really yet. It got pretty close, and so I'm thinking that you could certainly have another shot there at 16800 area. But now we just have to kind of wait and see, and this is how you get into the situation where you're coming up with really good reasons to stay out of a trade. You know, okay, I want to sell up here, but now you know that, okay, price has not come up there yet, so there's nothing to do. There's nothing to do anywhere in here. If you get impatient, maybe go to the smaller time frames and you'll buy or sell or do whatever, and that's fine. But then you're putting yourself, because you're trading at areas that are less likely to move, less likely to work. And if you look at this little one here, you may notice as well that there's another slingshot that was pulled back here and went down, so you could actually move it like that. That's even a better area. And then you have the highs here, and then you have some black space above here. Okay, so that'd even be an even nicer area. But now we're just waiting for price to get up there, 169, whatever area there. You can see that we're pretty far away from that still. Okay, and so I just take this information with me onto the smaller time frames, and this enables me to make much better trading decisions. So I know that, well, there's nothing really to do here. Okay, and this is where the whole discretion comes in. You can see here we had an area of demand. It was formed, the slingshot was pulled back to the lows, and it was released. And so the area, the lowest area that we want to buy at, is around here. Now price is getting involved with this, but it's just coming to the edge of the area that was marked off. So this is like kind of the first time back since this area was qualified. And so while on the bigger time frames you want to be paying attention to the major flows, you can take counter trend trades on the smaller time frames. And this you can do by kind of doing the same thing, where you ask yourself the question, well, where are the rectangles above or below price? Well, here you can see very clearly that we have a ton of them above price. We have hourly, 4-hour, and daily areas above price. So here you can sell. Okay, and then you get out of the trades at opposing areas that are located in the move above. Try the move up. So here we have, as we mentioned on the other chart, we have a low, we have a high. So all of this here is standing on this. So this is where the real demand is, and this is these are reactions to it. And so there's nothing to do here. Okay, there's nothing to do here. You don't want to buy that. You want to wait, and you want to look. You want to focus on these little price nodules below price on the leg up. And here we have something here. We have something in here, and we have we have something in here. We had something in here, tested once, then price went through it, and so that tells us that this is no longer valid. Why? Because it moved through it. And this also tells us where the edge of the buy zone is located. So this is the most expensive price you want to pay for this. So when price pulls back like that and starts to come down, I mean, you don't want to buy in here. You want to wait until price comes back into this big pullback, so past this level, to look to buy. And this is where this whole like Fibonacci thing comes in as well, where you have the high, have the high, and you have the low, and then you have the 50%, you have the 38%, and you have the 79%. Here we have these different zones, and this is often because the major pullbacks often, or the big pullbacks often occur in the top half of this. What does that mean? Well, that means that once price comes up here, and it comes up and it kind of starts to do this, it often happens from the 38 area and above, or I like to say the 50% area and above, telling us that this is kind of a bad area to trade unless you get like trades that go like this. You have really strong pushes like that. Then you put your fibs on, and then you have kind of decent areas here and decent areas here. Okay. Okay, cool. Good. So this is what I like to do. And so, I mean, when you look at a price chart like this one, I don't want to spend I don't spend too much time doing my analysis. And Eric, you said that you no longer operate with another mentor, and this is because you felt that he was, or you felt that the method required too much time. And I totally get that. And while it's nice to be able to use a couple of seconds on doing it, it does require a bit of legwork. And that's also okay, because you know that the more time you spend on it, if you focus on the correct things, then you're going to be making much better decisions. And as you can see here, we have a high, we have a low, price is starting to feed back into this area here. What does that mean? That means sell higher. And so that just makes it so much easier making trading decisions. And if you look about this one here, let's say that your long-term time frame is the daily. Okay, what's going on there? We can't really see enough. Yeah, even on the daily, you can see that we have an origin. It's down here. We have the high that is here, and our price is standing on this leg. What's it doing now? Well, it looks like, well, it's moving sideways essentially. So what does that mean? Well, that means you want to start to look to buy quite a lot lower than where price currently is. We have all of these pullbacks. I mean, price went up here, but on the way up it had some pretty deep pullbacks. So that means that you don't want to look to buy until price comes at least past the 50% area. So you could look to buy kind of from here and below. And we can see we have a couple of areas here. I like this one here very much. So this is an area I'd look to look to buy at, and this is certainly past the 50% area. And while 50% is just an arbitrary number, it doesn't really mean anything. It's just an attempt to bring your attention to the lower zones. We do have a pretty clear signs that price is going to have a bounce here. We have price went up, the slingshot was pulled back, and then it shot up. Okay, and here price went up, the slingshot was pulled back, it bounced up, the slingshot was pulled back, boom. Okay, and so these slingshot areas are really nice. The price pulled back here, slingshot was pulled back here, and so you can expect price to have a bounce at these levels. Here we have another little one here. They're all over the place because, as I mentioned earlier, I mean, price is fractal. It's doing the same thing on the monthly that it's doing on the 5-minute chart. Okay, so this is essentially how I'm finding out what's driving price. I'm looking at what price has reacted on. So we're looking at the origin of a move. We're looking at the high or the low, so beyond that, and then the move in between. Okay, and so there's a fair bit of discretion involved. There is a fair bit of discretion, and that's fine. There's nothing wrong with discretion because it certainly puts you in a better place. And as we mentioned on, let's do the robot lost its first trade. It's this one here. Let's have a look at that. So if we have a look at this trade, this is very interesting, where we spoke about this before. Let me see if I can zoom in. So we have, actually we need to be on this chart because then you can't. Okay, so this is a really good example. So the robot here was keen on buying here. And I thought, I don't really like it going on there, but I can't interfere too much with the robot, as I have to let it do its thing. Okay, and so we had this area of demand that was here. Okay, and so here is the beginning of the buy zone. Why? Sorry, the air in Denmark is a lot drier in Bali, so kind of struggling. This is the beginning of the buy zone because price pulled back. The slingshot was pulled back. Boom, it went up. It was pulled back and it went up. Pulled back and it went up. So this is just an area. This is just a nice pattern. But I didn't like that. I said as well, like in a previous video, that yeah, the robot wanted to trend here, but I wasn't keen about that. I was keen on on this area here. So this is the beginning of the buy zone. So you want to look to buy here and below. And price went through it, and it went exactly through it, and then it popped up. And now, well, it hasn't popped up, it's still figuring out what it wants to do. And so now price is kind of reacting here. And so this doesn't really make sense. And so discretion is really important. Here we have the exact same thing going on. We have the origin, which is kind of the low here. We have the high. So let's say that this is the origin. Here we have the high. We don't want to be buying here or here. We want to be buying from where the slingshot has been pulled back and lower. Okay, so you want to be buying from here and lower. Okay, and you find those slingshots. Here we have, what do we have? We have this one here. We have here. This is the bottom of the accumulation, which on a smaller time frame will be kind of a slingshot pattern there. Then I can't really see what's going on. We have another one here. You have the wick. See how price came up? We went down here, then left. So here's another one. This area. And so what does that tell us? Well, that tells us there's nothing to do on this time frame. But if we go to a smaller time frame, have a look at the daily, we can probably find some pretty clear patterns that might be interesting to us. No, I mean, there's nothing really there at all that I'd be keen on looking at. Maybe this one here. Price went up, kind of pulled down. So that might be kind of an interesting area, which is pretty close and lines up nicely with this monthly area. And so I think this is probably the first area that I would look to look to buy once price tests this area. And you can see now it's gone. See, now this area is gone. Okay, so now that area of demand is gone. And this is where we want to start to look to buy. Also, you have punishing swaps if you're selling. So holding these positions short is an absolute killer, and so you don't want to do that. Okay. Yeah. Nested areas. I mean, the discretionary tools are doing this pretty clearly, I think. Where you have, let's go to a different pair. This is kind of a dirty one. Go here. You can see this stuff pretty clearly. So we have the monthly area. Let me remove the robot. Good. So you have this area here. It's been established. Price is poked into it, and we had serious rejection. So we know that we have selling going on in this area here. And where are the rectangles? Well, they're above price. You don't have to focus on this. This is really far away. But notice that we have rectangles above price. Go to the daily chart. We have rectangles below price. And so here, I mean, this is tricky because this is kind of this is a really big move, and this kind of goes way back. Let's have a look where that goes back to. It goes back to this area. You see the slingshot here? Price went, was pulled back. And this is kind of the area where price returns to. So let's go from the lowest low to the low of this accumulation candle, which is like that. That's incredible. But you can see that, I mean, price poked down into this area a few times before. And again, this is the same thing as we've just discussed, where we have the origin, we have a high. See, we don't want to be buying here or here. Well, you can. On the monthly time frame, you don't want to be doing that. You want to be looking lower. And the beginning of the buy zone is actually all the way down here. Okay, but on daily, the 4 hour, the 1 hour, I mean, you can trade in here all day long. But know the price will start moving back down to this, because this is where we have buyers. Then you can look up to here. You can look for this move. We have this, and it goes all the way down to here. And so you don't want to be selling in here, or in here. You want to be selling here, and you can see the beginning of the sell zone is here. Can you see? From the high to the pullback of the slingshot, back to the high. So this is where we should be selling. So keep in mind that price is going to move through the thin liquidity all the way back up to the thick liquidity, where we have the slingshot being pulled back to. This is a telltale sign that price is going to move back up to this area here. Once it pokes up into it, once price pokes up into this, we're probably still going to start moving higher. Okay, because this is where the real buying is happening, and this is where the real selling is happening on the monthly time frame. And notice that we've been down here. What does that mean? Well, that means that we're probably going to eventually start to wriggle higher from here. And then you have something else to look at. On a small time frame, you have this one and you have this one. Okay, do you want to be selling these micro supply levels that are formed here and in here? No, you don't. You want to focus on the leg down. And if you look here, there's no reason to sell until here, or until the highs here, or until here. And once price returns to these levels, once it's done that, this one has already been done. See, price has been back to it. Price has been back to this level here. There's no reason to do it until we get here. Okay, and we have this area here, which you can see. Yeah, it's pretty simple, but I suppose it takes a bit of time to get your eye used to finding these areas. But I hope it doesn't seem too complicated, because it really isn't. Right, I'm going to wrap this up because I can hear my little one coming in here. So thanks for watching. If you have any questions, please send. Just a second, my love. Please shoot them off in the forum. Thanks so much.